An investor looking for premium market opportunities, presenting premium and exclusive service for investors by Kalkine.
Hello, I'm Rachel Jones. We have some breaking news here at Kalkine TV. At its meeting today, the Reserve Bank of Australia has decided to increase the cash rate target by 25 basis points to 3.35%. A report from the bank says global inflation remains very high. It is, however, moderating in response to lower energy prices, the resolution of supply chain problems and the tightening of monetary policy. It'll be some time, though, before inflation is back to target rates. The outlook for the global economy remains subdued, with below-average growth expected this year and next. In Australia, CPI inflation over the year to the December quarter was 7.8%, the highest since 1990. In underlying terms, inflation was 6.9%, which was higher than expected. Global factors explain much of this high inflation, but strong domestic demand is adding to the inflationary pressures in a number of areas of the economy. Inflation is expected to decline this year due to both global factors and slower growth in domestic demand. The central forecast is for CPI inflation to decline to 4 and 3.5% this year and around 3% by mid-2025. The Australian economy grew strongly last year. The central forecast is little unchanged from 3 months ago, with GDP growth expected to slow to around 1.5% over 2023 and 2024. The recovery in spending on services following the lifting of COVID restrictions has largely run its course, and the tighter financial conditions will constrain spending more broadly. The labour market remains very tight. The unemployment rate has been steady at around 3.5% over recent months, the lowest since 1974. Job vacancies and job ads are both at very high levels, but have declined a little recently. Many companies continue to experience difficulty hiring workers, although some report a recent easing in labour shortages. As economic growth slows, unemployment is expected to increase. The central forecast is for the unemployment rate to increase to 3.75% by the end of this year and 4.5% by mid-2025. Now, the board recognises that monetary policy operates with a lag and that the full effect of the cumulative increase in interest rates is yet to be felt in mortgage payments. The board expects that further increases in interest rates will be needed over the coming months ahead to ensure that inflation returns to target and that this period of high inflation is only temporary. Well, that's the latest breaking economic news from Kalkine TV. I'm Rachel, signing off for now.